Paying yourself as a business owner can be one of the most confusing parts about starting your own business. When can I do it? How do I do it? Do I report it? All of these are common questions for new business owners. I'm Harrison Patton, founder of Kaizen Accounting, where we provide tax and accounting services to other entrepreneurs chasing their dreams. Today, I'm going to teach you how to properly pay yourself as a new LLC owner. So, let's get into today's topic of how to pay yourself as an LLC. First up is the regular LLCs. These are just single-member LLCs or multi-member LLCs that are just partnerships. So for these, you're just recognized as nothing but a business owner. You're not recognized as an employee and you're not paid on any sort of salary. So the way that you're going to pay yourself is simply through owner's draws or distributions that go directly from your business account to your personal account. So you'll just do a transfer as needed from your business account to your personal account. These distributions can be done throughout the year as needed, as frequently or infrequently as you choose. It's important to remember though that your quarterly estimated tax payments will be based off of your earnings for the year. So you need to calculate at the beginning of the year a rough schedule for how much you're estimating to make each quarter so that you know how much to make in payments to the IRS each quarter. At the year's end, you'll be taxed on your net profit plus all of your owner's distributions that you take throughout the year. This is the best way as a new LLC or a new business owner to pay yourself, and the best way to structure it until you get to around the $40,000 to $50,000 mark, in which at that point you want to look into taking the S-Corp election. So as I just said, once you're at the $40,000 to $50,000 mark, that's when you're going to want to start looking to making the S-Corp election. So first, let's talk about how to actually do this. So it's actually a very simple process that all you do is fill out Form 2553 on the IRS website and you turn it into them and wait for their approval. This can sometimes take a couple weeks, so for your planning, make sure that you factor that in. It's a super simple form that you could do yourself, but I recommend if you're going to pay somebody that you don't let them charge you greater than really $50, as it's a 10 to 20 minute process and it's just the time that it takes them that they're going to charge you for, so don't let them overcharge you. There are a few other things that you want to make sure that you handle, such as updating your articles of organization, board of advisors, operating agreement, and a few other small formational things that you want to make sure you handle. It's important to note that by making this S-Corp election, you're still legally an LLC. However, you are now taxed as an S-Corp. So in the eyes of the IRS, you will be handled as an S-Corp, which brings a few different pieces to the puzzle. So now what y'all been waiting for, how to pay yourself as an LLC that is taxed as an S-Corp. So the benefit of an S-Corp is that it splits your payments as an owner into draws and a salary. And the benefit of where the whole S-Corp comes into the situation is found in the FICA tax savings. So FICA is your Medicare and Social Security, which adds up to 15.3%. This is all applied to your owner's distributions as a regular LLC and your owner's distributions as an S-Corp. However, with an S-Corp, you're splitting the owner's distributions into your owner's draws and into a reasonable salary. So your reasonable salary is taxed at state, federal, and FICA taxes. However, now as an S-Corp, your owner's draws are only taxed at federal and state levels. No FICA tax on these. So let's look at an example of why you would want to do this. So meet Jake. He is a graphic designer making $60,000 per year in net take-home profit. As a single-member LLC, he's going to be paying $9,180 in self-employment tax. But with an S-Corp election, Jake is going to be splitting that between an owner's distribution and a reasonable salary. And he's only going to be paying that self-employment FICA tax on the reasonable salary. The rest of it will flow through his K-1 income on his Schedule SE for his 1040 tax return as an individual. So after running the math, that's nearly $4,600 in tax savings just on this one simple deduction. Now, keep in mind, both are still subject to federal and state tax rates. However, we're just focusing on the self-employment FICA tax part of this, which is that 15.3% I mentioned earlier. So a few extra notes that you should make sure to take note of. Once you make the S-Corp election, you're going to be paying yourself on payroll, which means that you're going to need to be making payroll reports to the IRS monthly, quarterly, or however you choose, but you need to be reporting it to them so that they know where the money is going. The software I recommend for you doing this is called Gusto. I have no affiliation with them, but it's just the software that I've found to be the easiest to use, the most user-friendly, and just overall the best for the payroll world. And this needs to be done even if it's just you in a single member LLC, as long as you're taxed as an S-Corp. So yeah, it adds a little bit of a hassle for the reporting and splitting up and figuring out how much is your reasonable salary. But in the end, the tax savings make it so worth it. And yeah, once again, I recommend making this transition once you're at the 40K mark of net take-home profit at year's end. You can technically do it before, but if you run the math, the savings are not really worth it until this point, and it's kind of just an extra hassle with a few extra responsibilities that really aren't going to generate you much tax savings. So yeah, if you want to see if it's time for you as a business owner to look into making that S-Corp transition, you can click the link down below and you can schedule a free 20-minute call with my team to see how we can start assisting you on your tax savings journey and help explode your business growth. So I hope you enjoyed the video, and subscribe for more content like this that'll help be a guide for you to start your tax savings journey and ultimately end up lowering your tax bill at the end of this year. So I'll catch y'all next time. HP out.